Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Ops, and with me, as always, is Jay, aka Dark Matter. Jay, wow, you're looking sleek there. What did you trying to improve aerodynamics?
Yeah, I got to go quick and fast. I keep up with this market. So, all that aerodynamics got to get out of the way.
All right, all right.
I
All right.
look
Well, let's
younger,
get into
right?
it.
It looks younger.
Oh yeah, you do. You look younger. That's for sure. So Dark Matter's child is with us today. Um, all right. So before we get into it, I just wanted to say to stay tuned after Jay and I go through our thing. I do have an announcement to make. So I will do that pre-questions. So, but first we're going to go through Dark Matter's, but go through his trade plan because markets are intense. What do we have? Like a 250 point move in 2 minutes? Like, what was that?
Yeah, I mean, taco trade is exactly what that was. So let's maybe back up for a second here. We'll just do a quick recap, and then we can talk about the trade plan and what's ahead for us in the SPX and ES. So over the weekend, hostilities had increased between U.S., Israel, and Iran. That gapped us down. We hit, 64.50-ish, 64.25, I should say, on the ES and futures action here overnight. We ended up holding, consolidating between 5,500 and 64.25. And then at about 7 a.m. ish, Trump came out with a post. Hey, we're gonna, ceasefire essentially 5 days from bombing Iran's infrastructure and power grid and so forth. So what's odd is that pumped the market. Obviously, we almost saw a 300-point move out of that transition there, hitting 6,700 SPX basically. And now we're trading just about I think 66.35 there, about 66.50 I should say. So we are in a taco trade is what I'll call it, Wiz, with volatility compressing like no other. We were at about 27 and a half on futures VIX. Now we're trading about 23. So I think we've done the entire week's worth of trade plan here, to be quite honest with you. So I'll quickly pause. I'll let you just kind of chime in here. Did I miss anything in the breaking news?
I don't know. I mean, we started this show 17 minutes ago, so I feel like we have to have like financial juice up or something like that. Friend of Volland.
That's right.
But yeah, it's funny because Trump says we're having talks, and then Iran says we're not having talks, and then you don't both of those sides I don't trust. So it's you don't trust in anything anybody says. So I mean, a lot of times though, like we're gonna see some wild whipsaw moves, and that's the time to step back, kind of let everybody get their positioning in, and then step back in when we have our edge again, right? You don't want some rogue tweet or headline to blast, to blow up your position, right? So, from a trading standpoint, this is a time to kind of relax and step back a little bit. From a geopolitical standpoint, I mean, the headlines just fly all the time, and it's like, and even though like even if the ceasefire happens, the damage is done. Like the Strait of Hormuz hasn't been open for a long time, and a lot of Asian countries and European countries, they're all tapped out of energy, right? So it's difficult to really assess now. Now it's what the long-term macro, including the options. So I mean, this is a good time to step back, in my opinion. But
No, I'm with you on that as well. And in order to step back, let's step forward here. Let's look ahead. I'll come back and I'll recap kind of our key levels here. But if we start to look, on the weekly Vanna here, just looking at our exposure, you're pretty positive on the week now from Vanna. What's been interesting with this is this has been volatile all night as the moves have occurred, obviously, right, with volatility compressing, increasing again. So that's a little bit interesting to me. But when I start to look at those levels, I mean, this 6,700 level is a tough one. It's going to, and right now, what you've seen with the Iran news is a few things. Trump came out with a statement. Iran came back through their, news agency. Hey, we haven't talked to Trump. We don't even know what he's talking about. And now you have the Fed also talking about essentially what will the price of, to your point, what is the impact of oil prices going to have on inflation, interest rates, and things of that nature. So there's a little bit of an oddity here for me, Wiz, to start out this day, knowing we've pumped and rallied so much. But clearly, to me, I see 6,700. Like the market is not going to like, or the dealers, I should say, are not going to like going up above this. And we see that with the negative Vanna there. And then I go into gamma here, and yeah, we're starting to enter some positive gamma as we travel up, right? But you still have a lot of negative gamma here at 6,700 on the weekly. And then you go to the all expiration, and it doesn't look that promising either. You don't have a lot of dealer, not support I want to use, but dealer, pushing you up, right? It's just
Right.
you're facing the wall here. So we pause. Your thoughts?
Yeah, I think 6,700 is a hard wall. What was the top? Like when we shot up, what was the top area?
In the news today,
Yeah, this morning.
6,700. It was like literally that level.
Yeah. I was talking before about how I was cheating, quote unquote, but it was really Volland institutional, and skew is just way overpriced. Now I can't really, I could put it up, but it's going to be topsy-turvy now. It's illiquid VIX. Speaking of illiquidity, can you bring up the liquidity widget that we have?
Yes.
Because, we just reversed 250 points in like a microsecond. And
sorry, 1 second.
There it is, right there. 43. Like the normal is like, between 11, 14, that kind of area. And what delta adjusted dealer spread is for anybody tuning in that's new, we have a fair value calculation. It's based on a bunch of things too. It's not like just midpoint price. It's based on a lot of like arbitrage stuff and whatever. But anyway, and what that measures is the deviation between our fair value and the execution of options. 43 is obscene. Like that is off the charts, even of our historical, stuff. So that'll probably come down. But the normal is like 11 to 15. And, recently we've been in like the 17, 18 range, kind of getting a little bit to 19. So it's been bumping, it's been bumping up there. But, when you have a 250, a right tail move, really, you're going to get something like this. And this is, again, it's a good time to step back, let that get even. And skew is still way now, probably more, way underpriced. And I think that we can probably see, we're going to need to see a lot bigger negative numbers there on spot vol betas than what we currently have. So, yeah, I mean, and even though that negative, actually, that's underpriced even more now, right? Because we were under VIXing last week. We under VIXed every single day except I think Friday. Even though the market was coming down, there was a couple times we had spot down, vol down, right? We don't have a lot of space to have a vol crush rally up here. So if you're gonna, pin me down and say give me a lean, I think that we, let's just say in SPX terms, not ES terms, I think we could fill this gap. I think skew is way underpriced. I don't think it's going to. There is no room for a vol crush rally here. Okay. So I think that could be our thing. If we do bump up, if we do get up past 6,700, then it's, in my opinion, that's a time to start. All right, let me start looking at bearish positions.
Yeah, I'm with you there, and I think again, if we go back to our Vanna here, let's just pull that up, right? So clearly, we see here on the weekly, this is not a level to mess with, and
Yeah.
volatility is really going to peak when we get near and up this level. Obviously, we have some positive Vanna here, so
Valley, right?
yeah, it's like exactly. And then, I mean, you can even see here, just look at the valley to your point, right?
Yeah.
Boom, drops into negative Vanna.
Yeah, to me, I like that 67.25. If we could even get up there, that'd be a great place to short. I know it looks like, the Vanna is way positive up there, and yeah, any kind of catalyst can blast us off, declaring a ceasefire. That's a possibility. So, I mean, it's something to keep in mind. But the options positioning is not favorable right now for as much of a launch. We're not going to hit all-time highs tomorrow, or even, I don't even think this month, I don't think we'll even kind of get close. I think this could be kind of a, retail people load into longs. You see a lot of people getting long really fast, and then the rug might pull right out because everybody's going to realize the economy was disrupted. Like this wasn't a short-term thing. All those ships backed up. Okay, now we're good. That oil price is going to stay persistently high a little bit. So I mean, overall, I'm thinking, and of course I'm going to stand back a little bit, but I'm thinking this might be a pop to sell.
I think so too. And I was just getting ready to pull April's OPEX here. I know we still have end of month quarterly OPEX as well, but I'm kind of curious to look at, see how this shifted if it didn't. But I mean, you can clearly see there's just not a lot of support, going into April again. So another month where
the grade, so I mean, it looks like there is because we're in the 20s, but it's not, a lot of vol might have to drop in order for us to get, we're going to have to under VIX very, very strongly. And even that, like that wouldn't actually work. I'm thinking about it. Like somebody has to buy puts. That's really what I need to see in order to say this rally is sustainable, is we need to see a lot more puts bought than what we currently have.
I mean, you don't
for next week, but
well, I was just gonna say you really don't see that. I mean, we got our first spot here. The closest was 64.25, which was our zone that we reacted from. But you can clearly see there's not a lot of put buying on the weekly here still.
Yeah, it's only like 20 million. That negative Vanna there is where those put sellers start, and that's where you start getting that cascading downside, right? That big downside is not necessarily when dealers are negative gamma. It's more when the customers are negative gamma, and they are, on the downside. On the upside is one thing, but on the downside, when customers are negative gamma, those put sellers, those people that are harvesting VRP, they're the ones that get crushed. I think, and that's when they start getting out. So again, like liquidity is pretty low. I think, let's see what your trade plan is, whatever, other than step back. Let's see what your levels look like.
Yeah, I mean, my levels were pretty aligned. So, negative gamma at that 6,700 SPX, so major resistance. This is, in my opinion, the session's strongest sell wall. Obviously, this could potentially, pump up a little bit, shoot over, come back down, as we said. But I am looking at that 6,700 SPX. I want to see how price consolidates there. If we reject again, if they take out the session highs. So that's going to be my immediate level here. In my opinion, there is a ceiling here. I think that's, 6750, 6780. If there is some additional news that's coming out here, Wiz, that's going to compress volatility even more. which is you got to get below 23 on the VIX futures. Just plain and simple, you got to start heading towards 20 in order to get to that. And that's going to be tough cracking, but those are your levels to the upside. And I think to the downside, 66, 27, 25, basically, I kind of call that my fulcrum for, more bearish, selling on the day. And if you start to see that, you're just going to keep unwinding some of these key critical levels that we used as resistance earlier, but turned as support here on the news from Trump. So I would keep a news on Iran, watch volatility, keep an eye on what the White House says, what Iran's news agency says. There's a lot of back and forth right now going on, and you don't know what to think of it. So you got to play the levels.
Yeah, it's play the levels and size down.
Yeah, there's not a lot. There's not a lot to make a lot in this market either. Yeah. So you do not need to go hardcore.
As you could say, as long as it only takes one twit, right?
Yes, it does.
All right. What catalyst do we have this week?
Yeah, so not a lot on that. I mean, first of all, earnings, nothing much there. Unless you're into Chewy or Beyond Meat, not much going on in the earnings world that I would, I'm looking at this again. I looked at it last night.
I've heard of like 75% of these.
Yeah, like Biocardia. Like, yeah, sure.
What's Dermira? Yeah. What's Diet Dick?
Yeah, dude. I mean, there's Newsmax, I guess. I didn't even know they were a public company.
Yeah, I didn't know they were public either. I guess, you have to make money somehow. Oh, Lovesac.
Yeah. So I will not be paying attention to earnings. There's not a lot of catalysts here. No earnings. But if you go to the news, okay, obviously outside of the macro Iran geopolitical news, what we were expecting for this week was a lot of PMI data. So starting tomorrow, Europe will be reporting on PMI, but so will the US in the morning. We got the Richmond Manufacturing Index. And then later in the week on Thursday, you have your weekly unemployment claims, and then the consumer sentiment comes at the end of the week as well. So nothing as wild. I think Iran is the spotlight.
Yeah. Usually like in these last week of the month, in order to prevent, I remember when I worked with the government, in order to prevent that February stuff, like February being a 28-day, they don't do much in the fourth week. They always schedule everything the first to the third weeks, they being government releases and stuff. And that's why, and even like the PCE and all that stuff, all those surveys come in, right at the end of the month of the prior month. And then they get processed for 1 week. And then the statisticians do their things, the seasonal adjustment and all that kind of stuff. And then, then it gets really, then the higher up people completely, mash up what the statisticians do, and then it gets released. So that's kind of that's what it seems like happens. It seems, but anyway, so you and usually like that fourth week though, that's like survey collection time. So
yeah,
it's not.
It's usually
things.
Yeah, it's usually dead. I mean, again, you got Britain. CPI. Again, there's a certain, hints of some news, but Iran is just going to be the focal point here, in my opinion.
Yeah. All right. All right. So is that it? Is that all you got, Jay?
That's all I got.
Announcement time. All right.
Yes.
Time. All right. Here's our big announcement. Right. All right. I am proud to announce that I have been selected as a featured speaker at the upcoming SIBO Risk Management Conference for 2026. It is the premier global forum that takes place on April 13th through 15th in the heart of downtown Nashville. Now in its 41st year, SIBO RMC is the industry's most respected and educational event for institutional users of equity derivatives. So it brings together C-suite executives, institutional investors, and hedge fund managers to explore the latest trading strategies and risk management tactics. My session is titled The Unexamined Relationship Between Skew and Dealer Positioning, and it will provide compelling insights into the critical role of option dealer positioning and its profound impact on market liquidity and volatility. I am honored to share Volland's insights at the venue as prestigious as the CBOE RMC. As the complexity of the derivatives market grows, understanding these hedging requirements of option dealers is no longer optional. It is essential for any professional looking to manage risk effectively. So I look forward to discussing how data-driven strategies can help institutional investors navigate these shifts with greater precision. My presentation is going to draw from the extensive research on dealer flows and option pricing that we do at Volland, specifically focusing on why skew in the SPX index and other major benchmarks can be better priced in accordance with dealer positioning. Attendees will gain actionable insights into how Volland's institutional models identify liquidity shifts before they manifest as major market moves. So about the Risk Management Conference, the CBOE Risk Management Conference is an annual educational forum dedicated to exploring the latest products and tactics used to manage risk exposure and enhance yields. RMC is hosted by CBOE Global Markets, Inc., one of the world's largest exchange holding companies. RMC is an educational event for qualified institutional users of equity derivatives, such as institutional money managers, pension fund managers, consultants, insurance companies, etc. The conference is not intended or suitable for individual investors, and attendance is limited to qualified, approved registrants. In fact, it's already sold out, probably because of me, right, Jay?
That's right.
Registration.
Who wouldn't want to come and see you, Wiz? Come on.
Registration and sponsorship may be restricted and may be approved at the discretion of the conference organizers. So that's my big announcement. It is, I mean, I'm kind of humbled, and I told Jill, I was like, Jill, my wife, this is kind of like a smaller version of having my first child. I'm both like very excited and scared. I'm nervous out of my mind. Like, so it's like that's kind of the feel that I have. But yeah, so you're gonna, if you follow me on X or LinkedIn or whatever, you're probably gonna see a bunch of banners talking about speaking and all that kind of stuff. So all right, so that's my announcement. Thank you for the congratulations, Ramirez.
I mean, you know what this deserves, Wiz?
What?
Don't forget to like and subscribe and pound that like button. All right. Yes, there it is. My God, what an awesome graphic. Thank you, Jill.
It's true. Like and subscribe, because yeah, I mean,
we put out such great content, such great levels here week by week, Wiz, right? You're getting these amazing speaker engagements. Like this,
Yeah.
This is not fake news. This is not taco here. So
yeah, that's true. We're not going to get picked up by Newsmax anytime soon. So it's in my head because they're reporting earnings. I got to stare at what the Newsmax earnings are going to be. So that's yeah. So we do have one actual question here. We have relaxed mindfulness.
No, very interesting.
Yeah. I guess relaxed mindfulness may have been taken. All right. Why is put buying / selling important versus aggregate DAG for puts and calls? And how do we use that with Vanna on a swing trading basis for directional trades? Well, Vanna is affected by put buying and etc. So what we're seeing right now, what I'm seeing is skew dramatically underpricing what the dealer position should be, right? And when that's the case, dealers, the reason why that happens is because dealers are trying to incentivize people to buy options. And what has happened over the past week is people have sold a lot of options, in particular puts, many calls, and dealers have lowered prices all along the skew curve. Even though VIX is elevated, they're still low prices relative to their position in order to get people to buy those options back. And they're trying to get people to buy puts, buy hedging, buy in a healthy bull market, a lot of times participants buy those puts in order to lever up their bullish position. Because if you have portfolio margin and you buy an at the money, you buy like 100 shares of, say, SPY, and institutions don't do that, but 100 shares of SPY, and then you buy a put, all that margin that's below that put, you don't have to put up anymore. So you can lever up your bullish positioning. We're not seeing that right now. We're seeing people trying to sell vol because I guess people are assuming taco is happening. So, taco is going to happen as it has, or Iranian capitulation. I guess people had priced in that it's not going to be that big of a deal. So, but the economy is kind of wrecked by the whole Strait of Hormuz thing. I mean, oil prices have gone up, highest it's been in a long, long time. And so I think that's kind of that's where we're at now. We're kind of in a news flow mode, but when things settle down and markets assess where they are, that market pricing of skew is either going to have to come up to meet the appropriate skew of the dealer positioning, which it never usually meets. It usually comes close, but doesn't completely meet. And then it's either that or market participants buy a bunch of puts and bring that market curve down just to protect themselves. So that's what we'd want to see. There is like a bullish path out. If a bunch of people buy a ton of puts and buy equities back, there is a bullish path out, but that is a narrow one. That right now, market repricing, which means buying a lot of puts, is a downside move, although limited, or dealers repricing their skew curve to their positioning. That is a large vol expansion and downside move. So a downside move in equities. So that's kind of what, the most likely outcome is one of those. But the market has in the past been able to slither between the bearish possibilities and get that one bullish possibility. So so there is a good shot at that, that there is a shot at bullishness from here, but that's how put buying impacts the markets. It increases the premiums that the dealers have and helps their liquidity out. How do you use that alongside Vanna? Vanna is the reflection of how much liquidity is or how much Vega is going to affect their delta positioning. So, or the underlying affects their Vega positioning, or how much implied volatility affects their delta positioning. So that's why we use Vega, because dealers hedge delta very strongly, but they don't hedge Vega as strongly, right? They just try to change prices in order to do it. They've changed prices to a point where it's not it's kind of extreme in underpricing of skew right now. So I don't know, Dark Matter, do you have any comments on that? Am I muted or is he muted? He's muted. You're unmuted.
Sorry about that. Yeah. I think for me, just visually, especially looking at the charts, right? When I'm looking at like Vanna, those negative Vanna below spot, like I want to see those. That's where I get to see the put buying, right? And at least from a visual standpoint, those will be levels like 64.25 on a weekly Vanna there. So definitely align with you. You also want to see the put buying because volatility will start to come down, right? So if you don't see volatility come down, you're not going to see a lot of that put buying too. So I use Vanna as like one of my key Greeks as I'm looking for put buying is to see whether a certain level is going to compress volatility or keep expanding it.
Yeah. So that's the other thing. Vanna, when I'm talking about dealers trying to incentivize put buying, that's primary deltas, right? Or what they call hard deltas. What institution calls soft deltas, that's the existing Vanna. So they want to get to a point where their Vanna is very positive, and that will bring skew down if there's no put buying. So that's kind of why we also look at Vanna pretty heavily, is because, how will the Vanna, how will the underlying, when the underlying moves, how will Vanna adjust their skew curve appropriately? It helps us identify vol crushes, vol expansions, big liquidity expansions. And that's really where that's kind of how Vanna really impacts the market. And when you're in the Discord and stuff, and when you're trading it, you just kind of try to boil it down to positive Vanna good, negative Vanna bad, or something like that, so you just kind of like boil it down. But the what you said is the why. So that's the why. All right. How many viewers out there, of the hundreds of viewers out there, how many of you are now confused by what I just said?
Are we going to have to unwind what you just said here now? Thanks a lot, Wiz. We were doing so well. Don't forget to like and subscribe when Wiz confuses you.
That's right, because then you can see the recording right away. Look at this. I can hide behind my video.
Yeah. Whoa.
All right. So it's 9:15 on already a crazy day. All right. May Volland help you in your future trading ventures.